Hi, welcome to Mountain Money Moves. I'm your host, Alexander Scott. I've been working with Barrett Financial as a mortgage broker as well as a builder in the Park City area, and I would like to take you through the market's snapshot and welcome back to everyone that I've met before in my life. It is a pleasure to be talking to you about real estate, finance, and lifestyle in your local rental property locations. We'll be diving into the pulse of Park City this episode, from interest rates to inventories, even surprise twist in the cultural landscape. The Park City Library is on the move. Yep, you heard that right. In the market snapshot today, we'll be kicking things off with the numbers of late July. The U.S. prime rate holds steady at 7.5, unchanged since December of 2024, even after two dissenting members of the Fed disagreed with Jerome Powell. This rarely happens in the market as they are all very data driven and all have very good consensus most of the time. Where we are today is a lot higher than we were in the past decade. But in the overall scheme of things, we are not to the all-time high of the Fed rate. This is because of distressed assets in the market that have not been purchased by the investment community. We had drops in inventory, it drops in purchases from our investment participants, but consumption stayed the same. Overall, our consumption rose in healthcare and housing the most in services, as well as energy, financial services, and other non-durable goods. What did drop was motor vehicle prices, as well as recreational services. This was notably noticed in Las Vegas, as we've seen a drop in people going to hotels and gambling. The Fed rate benchmark interest rate was unchanged 4.25 to 4.5, marking the fifth consecutive meeting with no change. Consequently, the U.S. prime rate is at 7.5, reflecting a cautious status amid mixed economic signals. Consumer spending and housing services. The consumer spending rose modestly in June of 2025 to 0.1%, a real increase driven by a rebound of service spending. In May of 2025, service spending increased by 19.9 billion, offsetting a sharp drop of 50 billion in goods spent. Signal shifting towards experiential and essential services. Spending on housing services, including rent, utilities, and maintenance, has remained strong, reflecting the consumer's prioritization of quality of life and stable amid high mortgage rates and limiting housing affordability options. Despite the weak home sales, demand for housing-related services is on the rise, supported by government transfer payments and a steady labor income. The 10-year Treasury yield has shown upward moment, fluctuating between 4.43% and 4.5% over the past week. This has gone up since COVID's drop, and notably is showing very high safety for cautious investors. This suggests investors expecting a persistent inflation and uncertainty around future Fed cuts. Global equities, and particularly the US equities, paused their rally with notable gains in tech stocks like Microsoft, Meta, Figma, and Nvidia hitting all-time highs. Non-US equities, especially in Asia and Europe, have performed well, though short-term volatility is expected due to trade policy uncertainties. Investment banks recommend using pullbacks as a buying option, particularly in Asia, excluding the Japanese market. As you can see, we had a very di diverse increases in our equities market, and particularly in utilities holding strong, as well as aerospace and particularly defense contract industrials holding very strong, with deals being made by Trump in the European Union as well as other allied countries. Tech holds the strongest, plowing forward with these all-time highs in this record bull market, while materials are lagging as well as energy. WTI crude has been holding steady between $65 and $70 for September's contract. Brent crude prices have been volatile, recently averaging around $69 per barrel, up from earlier forecasts due to geopolitical tensions involving Iran. Despite short-term spikes, rising global inventories are expected to exert downward pressure on the price through the rest of 2025. WTI crude is forecast to hover around $65 per barrel, reflecting oversupply concerns despite ongoing geopolitical risk, particularly in the Middle East. In Park City, the real estate market continues to show resilience. Median household prices sit around 1.79 million, up 7% year over date. Inventories is climbing with over 765 residential units on the market. This is back up to where 2019 levels before COVID. Luxury homes remain the backbone of the market, with cash buyers dominating. In fact, 75% of June transactions were cash purchases, especially in neighborhoods of Promontory, Deer Valley, and the Canyons. Deer Valley East has particularly seen an explosion due to different properties being developed in large amounts. So what does this mean for you? If you're buying, expect competition and quick turnarounds. If you're selling, price strategically is key, especially with new construction drawing attention. Now let's pivot to something that's stirring up the conversation beyond the housing market: the Park City Library relocating. For years, this library has been the cultural anchor of Park Ave, hosting everything from Sundance screenings to community workshops, but now is growing demand and space availability, modern amenities. The city has greenlit to have a new location in the Snyderville and Kimball Junction, which details still unfolds. A new site expected to offer expanded study rooms, tech hub, event space, while maintaining signature mountain charm. Relocation aligned with Park City's broad push for smart growth and community-centered development. And yes, the Lucky One Cafe and Park City Film will still be a part of the original Park City Library. So how does the library affect the real estate market? More than you think. Cultural amenities like libraries and rec centers boost neighborhood appeals, in particular around Snyderville Basin. With year-round living in Park City, buyers are looking for more than skiing access. They want walkability, communities, and connection. The new library could spark this interest in Redstone area. And for investors, keep an eye on zoning changes and infrastructure upgrades around the site, including the parking at the old Kimball Junction Library Center. In the building trends of Park City, let's talk about the rising from the ground in Park City, literally. The construction scene here is evolving fast. It is not just about the square footage anymore. The dominant trend, mountain modern architecture, think clean lines, wide plank oak floors, natural stone, expansive glass, and frames the Wasatch like a living mural. Developers are moving away from heavy timber and rustic looking styles, favoring organic textures and warm, neutral blend luxury with livability. Builders are also prioritizing sustainability, featuring energy efficient appliances and reclaimed materials, reflecting the growing demand for eco conscious living in Park City. It's not just an aesthetic, it's function. With more families living here year round, homes are designed for multi-generational use, flexible great rooms geared around mudrooms, smart storage, and everything from skiing to mountain biking. Custom builds in neighborhoods like Promontory, Silver Creek are leading the charge, while new developments near the Jordanelle Canyons Village are offering turnkey luxury condos with high-end finishes and a strong retail potential. Bottom line, Park City's construction isn't just keeping up, it's setting the pace. Year to date, with single-family homes, the only change that was negative was in Park City. Snyderville Basin, Jordanelle, and surrounding areas all saw increases in median prices as well as volume. In the different kinds of segments, the single family home saw the largest in volume in units, while land saw a decrease of 7% in units and 15% in volume, showing there is a larger inventory on the market. This is healthy from where we were in 2019, where there was no inventory in our market. Talked about Park City, but how does it compare to world-class ski towns? Let's just make a moment and zoom out. Like cities like Aspen, Vail, and Jackson Hole, we see a mix of design philosophies, learning from rustic elegance and others pushing for sustainable luxury. Park City is carving out its own identity. Homes are here are trending towards mountain modern, clean lines, warm textures, expansive windows that frame the Wasatch Range. Builders dial up functionality too, geared around mudrooms and multi-generational layouts. Sustainability is more than a buzzword. Compared to Aspen, Wellness Forward Estates, or Jackson's legacy-focused log lodges, Park City's approach feels more accessible, designed for year-round living and a draw for remote workers and young families, more than just luxury living. So if you're comparing ski towns, Park City isn't just keeping up, it is quite literally leading in lifestyle integration and flexible, smart, beautiful, built to match pace of modern mountain living. This was the Mountain Mover Money Moves podcast, and I'll love to see you again next week. Have a wonderful day.